Welcome to this post-policy press conference. Today we have with us Governor Shri Shaktikant Das, Deputy Governors Dr. M.D. Patra, Shri M. Rajeshwar Rao, Shri T. Ravi Shankar and Shri Swaminathan J. We also have with us Executive Directors Dr. O.P. Mal and Dr. Rajiv Ranjan, and also some other colleagues from Reserve Bank. Sir, as is customary, I would request you to make your opening remarks and thereafter we'll move to the question answers.
Good morning and namaskar to all of you once again. I have 7 points which are primarily drawn from the statement which I have already made, and they are very brief. 1. Domestic economic growth is resilient. Number 2. Inflation has moderated from its earlier high levels, but the pace of disinflation is uneven and slow. Number 3, but still there is a distance to cover to reach or to align inflation to the 4% target. Four, the financial sector is stable with well-capitalized and unclogged balance sheet. 5. India has enhanced its resilience against spillovers from external shocks. 6. Foreign exchange reserves have reached a historical high of $675 billion. 7. Reserve Bank remains committed to ensure orderly evolution of financial markets, which are in, that is regulatory, orderly evolution of financial markets in its regulatory domain. I read this point again. Reserve Bank remains committed to ensure orderly evolution of financial markets in its regulatory domain. Thank you.
Thank you, sir. Before we start, I will request the media friends present here to please wait for your turn. Also, please restrict to one question per person so everybody gets an equal chance. If time permits, we can consider other. Sir, there are 24 participants from media today, and with your permission, I'll call out their names. So we'll start with Ms. Lata Venkatesh from CNBC.
Before that, I just want to make one point. The second point actually, I just want to rephrase it, what I had said. It should read as follows, that inflation is moderating, but the pace of disinflation is uneven and slow. I said that it has moderated from its high levels, but I have actually, the wording should be, inflation is moderating, but the pace of disinflation is uneven and slow. And third point was that there is still a distance to cover to align CPI inflation to the target. Thank you. Yeah, please go ahead.
Good morning, Governor, and everyone in RBI. I'm Lata Venkatesh from CNBC TV 18. Governor, can you parse the impact of the global, especially the US economic data, on the Indian economy? The last 1 week expectations are what was, the Fed's rate cut would be 1 in September for 2024. Now the market is factoring in 5, maybe 125 basis points. While we completely understand that, you will set policy as per domestic economy, regardless if the, economy abroad is so weak, it will tell on global growth. So if you can give an idea whether you see any downward bias to our growth and inflation, if things were indeed to turn out to be that the Fed has to do 5 cuts, if there is that kind of a slowdown. As well, a request, why don't you give us now nominal forecasts also? Because that is becoming as important.
No, that's a separate issue. Now, I would guess that there would be a few other questions also on this topic because it is so fresh in everybody's mind. So we were expecting actually quite a few questions on this issue. So is there anyone else who wants to ask a question on this particular area or a related area so that we can take it all together? No, I think same questions. Okay. Now, you see, there were some developments in the, we were referring to the United States economy. Now, actually, if you see, I would like to say two things. Number one is that the unemployment data which came from the United States just last week, that has created some, that has led to this kind of speculations. But if you look at overall economic growth in the US, I think it's doing quite well. The second quarter growth numbers in the United States were higher than the first quarter, and it was about 2.8. It was 2.8%. And then the second point is that this is a kind of a, this is just, so far as unemployment is concerned, it's a 1 month's data. Now, based on a 1 month data, you cannot assume that, you cannot rush to a conclusion about possibility of slowdown or possibility of a recession in, in a large and the largest economy in the world. So you have to see, you have to wait and see the incoming data. In any case, I think some narrative coming out from several members of the Fed, they have also said the same thing, that we need to watch. So therefore, I think it would be sort of, I would say at this point of time, it would be premature to talk about a recession in the United States, but I am not holding a brief for the US, and all that I would like to say from the perspective, from the point of view of the Reserve Bank, is that we will be watchful of all incoming data from domestic as well as, in this case, from external sources, and we will deal with all emerging situations. Further, let me also add, and it is there in my statement as well as in the points which I read out just now, today India has improved its resilience vis-a-vis external shocks quite a bit. I think India is far more resilient than what it was earlier. So we will have to wait for the incoming data and deal with the situation. International agencies like, all international agencies like the IMF, the OECD, the WTO, they have all projected world trade to rise this year, to grow this year to at about 3% or so against very low growths last year. So this projection was just made very recently, and that would obviously support the overall external demand situation. So I'll stop here.
Thank you, sir. May I request Ms. Sangeeta Mehta from Economic Times, if you would like to add?
Thank you, sir. Sir, in your policy, you had mentioned that you'll be watchful of the inflation, and then you also said that you'll take measures depending on if it is transitory or persistent. So what are the measures that you would take to conclude? I mean, what are the measures that you will use to conclude that the inflation is transitory and it is not persistent? What are the tools or the measures that RBI has in mind?
First of all, we look at the sources of shocks. There are various types of items in the food category. They come with, say, a 7-day recall, which is the most perishable, and a 30-day recall, which is a little longer. So usually the most perishables have a very short shock that lasts not more than 2 months. Also, we can calculate what is called persistence, which means how much time does it take for a certain price to return to its mean value after a shock. So we watch all these things when we judge whether it's persistent or transitory.
Thank you, sir. Next we'll have Mr. Mayur Shetty from the Times of India.
Yeah, there was a study which said the neutral rate has moved up. And also you recently increased the liquidity requirement for banks through the LCR. So my question was whether there is a new normal when it comes to interest rates and liquidity, which is higher than earlier. And also a follow-up on that is that you asked banks to mobilize more household deposits. So is that an indication that deposit rates should go up?
You see, with regard to LCR, liquidity coverage, which the banks are expected to maintain, it's a draft which we have put out in the public domain. We will get inputs from all stakeholders, including the banks and other experts. Based on that, we will finalize our decision. We will take a decision. So far, it will not be correct to say that we have increased the liquidity requirements because it is still under discussion. We are waiting for the inputs which will come. Now, so far as deposit rates are concerned, it is for individual banks to decide on these matters which are entirely a part of their commercial decision making. Lending rates and deposit rates, as you know, are deregulated. It is for banks, and the situation will vary from bank to bank. So depending on the overall economic situation, financial conditions prevailing, depending on individual banks' own internal position with regard to how much deposit they have, what is the composition of their deposit, what is their loan growth, it is really for the banks to decide on the deposit rates, and the banks will have to take a call. All that we have done is to say that the bank should use their branch network, come out with innovative product offerings in both goods and services. not goods, both in innovative product offerings with regard to deposit, with regard to mobilizing deposits. So therefore, it's for the banks to decide. With regard to the neutral rate, I would request the Deputy Governor Michael Patra to take that question.
Yes, so as we promised, we brought out updated estimates of the neutral rate, and as we suspected, the neutral rate is actually reflecting the better performance of the economy. A major driver of the neutral rate is potential growth, and that has started to rise. So if you factor in the neutral rate, then you will see that the current level of the policy rate is probably exactly right. And about the liquidity question you asked, liquidity is the operating procedure. It just reflects the policy stance. It's not independent in itself.
Thank you, sirs. Next, we'll have Ms. Swati Bhatt from Thomson Reuters.
Thank you. Governor, I had two very related questions with regards to the foreign money that has been coming in. One is we saw the government, sort of go back on the Far Securities. Also, RBI put out the release, which market participants said is kind of a U-turn that you've taken on allowing the 14 and 30-year bonds as part of Far. Now, today we've seen that the 10-year benchmark bond has reached 9.6% ownership, foreign ownership. Is this going to become a matter of concern with so much ownership in benchmark securities? Because that is the longest tenor bond that is now available for foreign investors to invest in freely. And is there a likelihood of a rethink on Far Securities beyond what has already been announced? And secondly, even on the OIS front, foreigners have a 3.5 billion rupees limit on how much positions they can take in the onshore market, which is almost nearing exhaustion. Is there going to be a rethink on that? Because otherwise we could likely push this market to the offshore offshore OIS markets, NDOIS. Thank you.
I would request everyone to just ask one question, please, so that everybody gets a chance. I think you take the question.
So, Swati, if you look at the total outstanding, of the total outstanding 10-year paper, the total foreign holding, FPI, under various routes is only 4.8% outstanding. Now, if you look at the MTF, the medium-term framework, it has certain limits on security-wise holdings, FPI-wise holdings, and concentration limits. So they are natural barriers to any volatility there, right? On the question of the exclusion of securities from the FAR, we have observed that the major part of the interest of FAR investors is in the 5 to 10 year. Actually, it accounts for 90% of the total investment. And the interest in the 30-year is just 2% of the total stock of 30-year that has been issued. So that's one thing. Also, it's like giving time to people to adjust their portfolio, because we know that the weight of India in the bond index will slowly rise over a 10-month period. So they have time to adjust their portfolios. Now, all the existing securities issued are available for FAR investment. So that makes 41 lakh crore of available investment, of which investment today is only 2 lakh crore. Okay, so there's an ample amount of space to go. Our assessment is that in the categories that are now allowed, there are going to be 4 lakh crores of new issuances, which are open to FAR. Okay. Apart from that, there is the MTF, on which while the limit is 6%, it's only 2% today. So it's not as terrible as it is made out to be. And what will happen is that our hope is that concentrating them into this 5 to 10 year segment will actually make it more liquid, and better price discovery will occur, and transaction costs will fall as depth increases. What was the question on?
So the 3.5 billion limit is almost near exhaustion. It was set in 2019 and there has been no review of that. So a lot of these FPIs will now have to move offshore if they have to hedge their interest rate bets. So is there going to be any increase in that 3.5 billion limit?
No, we are reviewing it constantly. Also remember that we are not open on the capital account fully. So this is part of that. We will review it as the limit is neared.
Thank you, sir. Next, we'll have Mr. Anup Roy from Bloomberg.
Thank you, sir. Sir, in the morning you spoke about the food inflation and why it is important. But the government in its economic survey is saying that food inflation should be left out from the target. And also they are arguing with some merit that monetary policy cannot control food inflation. The consumption expenditure survey also said that the weight of food is also probably reducing in the CPI. So would you like to have a change in the CPI, and is that the right target for you to aim for?
You see, the consumption expenditure survey is undertaken by the NSO. The current CPI basket, and what is the weight of core, what is the weight of fuel, what is the weight of food, has been decided on the basis of 2011-12 data. It's